The broadcast is now starting. All attendees are in listen-only mode.
You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 11th day of November, 2020. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at CFRN.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds. That will give you one-click access to the show each and every day. You'll get an email right before the show. There's a link in the email. Just click it. It gives you one-click access and access to the chat box during the show so that you can ask questions and participate in the discussion. Now, On the days that you're out of your office, away from your desktop, just point any internet-connected browser to cfrn.net/live. There you'll find a live, real-time simulcast of the show. As it unfolds, you simply won't have access to the chat box. We also stream live during the show on Facebook, YouTube, and Twitter. Let's open with a word of prayer. Heavenly Father, as we gather together here today in your name, we thank you for fellowship and family. We ask, God, that you would strengthen us, restore us, and inspire us with your love. God, would you fill us with your peace so that as we journey onward through this day and days to come, we would pour out your love and grace to others. We ask that our souls would catch the wind of your Spirit so that we would take your promises to all of the earth. In Jesus' name, amen. Well, happy Wednesday. Let me give you the numbers from around the world. Cash markets, the indices, as they're called. Starting here at home, in the U.S., the Dow up 61 points. NASDAQ up 207 points, which is almost 2%. S&P 500 up 28. That's almost 1%. The Russell 2000 down 4. In the commodity basket, crude oil up 87 cents, trading 42.23 last. It's a gain of 2%. Gold dropping $15.10, trading 18.6130 last. Silver down 20 cents, trading 24.26 last. In the Asian markets at the close, Nikkei posted a gain of 444 points. That's a gain of almost 2%. Shanghai down 17. Hang Seng down 74. And in the European markets at the close, FTSE posted a gain of 85 points, 1.25%. The DAX rose 53. The CAC gained 26. And that gives us a mixed day in Asia. It is a green day in the UK. And only due to the Russell, it is a mixed
I'll let you know what the parts went there.
in the US of A. With that, we'll go to Michael. I know he's here because I can hear him in the background.
Yes, I am here. I am here.
And
All right.
he'll take it and give you a recap of everything that happened this morning in the live training room. When he's done, I'll be back. And we'll take a look at the Logic 247 alerts and the Concierge Trade Alerts from last night. Michael, it's all yours.
Okay. Here we go. All right. Good afternoon, everyone. Today is the 11th day of November, 2020. Today we made, well, we were break even in the euro. We didn't trade crude. We made 34 ticks in gold and 12 ticks on the ES. Again, if you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. That put us up $490 a contract on the morning session. Today it took 24 minutes and 3 trades to get to the goal for the day. At that point, we're up $120 a contract, and we took a total of 11 trades today. So 11 trades. On the month now, we're up $4,345. That's over 8 trading days, averaging $543 per contract per trading day. I am now at my 186th consecutive trading day of getting the goal. And on the year, we're at $92,033. It's over 211 trading days, averaging $436 per contract per 2-hour trading day. If you are not part of the CFRN family and you want to become part of the CFRN family, there's a bunch of different ways to do it. We've made it easy and affordable for you, but we have different ways that you can become part of the family, different levels, and all you have to do is just send an email to support@cfrn.net, put family in the header, and we'll get back to you with all the different ways. Okay, so on gold, I'm going to start out with gold. Okay, we missed the first couple of trades right here this morning, the first few trades. Then finally we got to break even. And then on the next one, we picked up 7 ticks. We missed the one right after that, the follow-up. And the one after that, we picked up 8 ticks to put us at plus 15. This one right here, we picked up 2 ticks to put us at plus 17. And here we picked up 10 to put us at plus 27. Here we picked up 1 to put us at plus 28. And here we picked up 6 more to put us at plus 34. Now the last half an hour trading in gold was kind of messy. And during the break, it was one short trade right here. That was pretty much it. The YBR trades, like this one right here, worked out pretty well. I'm just going to see how many there were. But there were a few of them in there in gold today. Now the euro, we just had one trade on the euro right here, and it was a break-even trade. We missed this one, and that was it. As far as news events go, it says today's a U.S. bank holiday. I don't know about that. Crude, we didn't do anything with. You see, it was all choppy through here. Excuse me. We did have a YVR trade right here that slowly ground its way up. It would have been a break-even trade for me if I'd have taken it. And we really didn't get anything else. So crude was kind of slow. Scrolling back, hold on. On the ES, we had a few trades. The first one was right here. We picked up 2 ticks. The second one was here. We picked up 2 more ticks. And the third one was there. We had break even, another break even, a plus 4. That got us to plus 8. Then it got really choppy, and I really didn't want to trade it. Okay, we had another break even, and here we picked up another plus 4 to get us to plus 12. Okay, and that was it on ES this morning. Excuse me. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, again, is the 11th day of November, 2020. Today we made 34 ticks in gold and 12 ticks on the ES. That put us at plus 490 on the morning session. Today it took 24 minutes and 3 trades to get to the goal for the day. At that point, we're up $120 a contract, and we took a total of 11 trades. So on the month now, we're up $4,345. That's over 8 trading days, averaging $543 per contract per trading day. We are now on our 186th consecutive trading day of getting our goal. And on the year now, we're at $92,033. That's over 211 trading days, averaging $436 per contract per 2-hour trading day. Okay. If you are not part of the CFRN family yet, you can go to eminifuturestrading.com or just send an email to support@cfrn.net and just put family in the header. We'll send you all the different ways that you can become part of the family. Okay? We've made it easy and affordable for you. All right. And with that, we'll pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I am. Give me just 1 second.
Okay. Bring this over here. Okay. I can see your screens.
Alrighty. Recap of the recap.
Today it took 24 minutes and 3 trades to get to $120 per contract.
24 minutes, 3 trades. Good job.
Thank you.
Once again.
It's,
All right, buddy. Hope you feel better.
me too. Me too. All right.
All right, guys. We are currently on week 119 of Logic 247. That's our 24/7 round-the-clock E-mini alert service. We open for business Sunday night at 6 p.m. Eastern, and our private Telegram channel remains open around the clock until Friday afternoon at 5 p.m. Eastern when the global markets close. So, week 119, so far this week, we've issued a total in the Logic channel of 35 alerts, 11 never triggered, still waiting on 6, 18 actionable alerts, 3 stopped out based on not risking more than $300 per contract, per trade, less when possible. So that's 17% of actionable alerts stopped out. Typical number, average number is 20% of Logic 247 alerts do get stopped out. Now our other alert service, the Concierge Trade Alerts, those do not come out around the clock. Those come out once per session at the beginning of the Globex session each evening. Globex opens at 6 p.m. Eastern, so I'll do my best to get the report out to you as soon as possible. Last night it was 7 p.m. Eastern. Cover the S&P, the Dow, the Russell, Crude, NQ, gold, and silver. The way you handle this report when it comes out is you go to your chart, put a line in the sand at 35.75, because if price reaches 35.75, you want to be long at that number or looking for longs above that number. The market drops to 35.30, we want to be short at that number and or looking for shorts below that number. And that applies to each one of these. Okay, now important prices, important areas are almost always tested. So the importance of drawing this line is that once triggered, there's a higher probability of the alert being triggered multiple times than it not being triggered again. So triggered once, probabilities are you'll see it come back to that number and trigger again. Some days we see as many as 3, 4, 5, 6, even 7 triggers off the same number. And remember, even though during this part of the show we talk about some larger sized moves, you only need 2 points a day. In the morning in the live training room, Michael is teaching you our basic underlying strategy, methodology, the principle upon which we operate. Okay. Now with the alerts, those are based on a larger time frame, 30-minute chart, And stop loss is determined using a three-step methodology that I teach all of our traders based on market structure. In the training room, for the purpose of simplicity, as we're teaching you the strategy, we just use an 8-tick hard stop on everything. Okay. If you choose to move into the larger time frames, then you don't want a one-size-fits-all stop loss. Every trade, every opportunity in the market is unique, and you want to evaluate it from the trigger point. Where should the stop loss be? And I show you how to read the chart and let the chart tell you where the stop needs to be. And if that placement doesn't honor the maximum $300 stop loss, then we wait for the next trigger, or we wait for the next alert. Okay, so if you want to grab a screenshot of those, so we'll take a walk through them here. Okay, got it? Okay. Now, on the daily chart, we'll start there. S&P 500, E-mini. It looks like we may get potentially a new all-time historic closing high today. Now, on Monday, we had a new all-time historic intraday high, but this is the all-time historic closing high, 35.67.50, based on the December contract. So we took that out, we ran all the way to 36.68, but we were not able to close there. We dropped back to this trend line, and I had drawn this trend line a few days ago. We connected this top to this top to this top. So on Monday, we blasted through the trend line, and it came right back to do a Trader Vic, as it's called, where we touch the top of the trend line and then continue in the direction of the breakout. So price is at 35.69 and a half. And the close, the all-time closing high was 35.67.50. Well, if we close where we are right now or higher, then we will have a new all-time closing high in the S&P 500 E-mini Futures. This green line is called the BBC, just stands for Bull Bear Cross. When price gets above it, we're bullish, we're anticipating higher prices. When price crosses back below it, we're bearish, anticipating lower prices. Back above it, higher prices. Below it, lower prices. You get the idea. Now, this other indicator is the CFMA1. I refer to it as blue and climbing or red and falling. When you're above the BBC and you have blue and climbing, you're absolutely looking for higher prices. When, no matter where price is, red and falling kicks in, that represents resistance and potentially lower prices. See how right here, after that all-time historic high, in the next daily candle, we got back below blue and climbing. The BBC did provide support. Whenever price pulls back to the BBC, whether from above or from below, when it pulls from above, we expect it to be good support. When it pulls up from below, we expect it to be good resistance. Now, the pullback holds more often than it doesn't, and price always reverts to the mean. Just so happens in our case, the mean is green. Think of it as home base. Price always comes back to the BBC, and that's where it makes its decision. Like here, we had a leg, got below the BBC, you got red and falling. So as we pull up to the BBC, considering that we are pulling up to it, and we got red and falling happening, we expect that to be good resistance. Now, when price gets above the BBC, and you've got blue and climbing, when price pulls back to the BBC, we expect that to be good support, as it was here. And gave us 1, 2, 3, 4 sessions in a row up, but we were unable to take out that all-time historic high. Now, what I just explained about the indicators and how we use them applies to every market and every time frame. Our entire methodology and strategy is fluid across all markets and all time frames. Same as gold, the same as crude, the same as the Russell. And some people will tell you, you can't do that. You can't trade everything the same because the markets have different personalities. I don't even argue that point. They do have different personalities. But we're not looking for a date. We're just looking for a trade. Now, when you're in an auction style market, and what I mean by an auction style market, you got buyers on the bid, sellers on the ask, price channeling back and forth all day long. It's an auction style market. And the underlying principle upon which markets operate do say that you can trade the S&P just like you trade gold, just like you trade silver, just like you trade pork bellies, which we don't trade. So, I gave you the recap on Logic 247. I gave you a screenshot of the Concierge Trade Alerts. And let me just give you an idea of what the logic alerts look like, and then we'll take a walk through the Concierge Trade Alerts. Okay, last week was week 118. We had a total of 68 alerts, 13 never triggered, 2 carried over, so we had 53 actionable alerts. 6 of those were stopped out, so 11% of actionable alerts were stopped out last week. That's not a typical number. Typical number is 20%. And then week 119 starts Sunday night at 6 p.m. Eastern when the global markets open. We had 2 carryovers, one on the NQ, which the market made $2,355 per contract available. The way you read it, this is alert number 5,629. NQ Z20, this is a December contract, the NQ, buy at 12,140. Initial target 12,150. That's $200. NQ pays $20 a point. Potential resistance 12,200. Now this number here, that is the swing high on a long or the swing low on a short at the time Valerie comes through and does the recap. So we have third-party verification on the recap. This other carryover was on the Dow. It was to be long. That one only ran $85 per contract traded. And then this was the very first new trade issued for week 119 Sunday night. It was an S&P gap fill, which we only give them so much time to trigger, at which point we put the Z's in, which means it didn't trigger, and then we move on to greener pastures, because you don't want to be tied up waiting on something to trigger when the market is heartily heading in a different direction. There's the Dow, no trigger. Here's another NQ. Sell 12,110. Initial target 12,100. Potential support, that's like a second target. That's how you should think of it. Initial target. Now on longs you'll see PR, which means potential resistance. Those would be initial target, second target. Sometimes there'll be 3, 4, 5. Potential support, potential resistance. Think of those as targets. This NQ, market made $3,415 per contract traded available. Now, if you chose to just get out at the initial target, that's a $200 per contract move. Good job. Good bells for you. Now, if you've become a part of the family and you're not hanging out in the discussion group and Telegram, okay, we had a channel for everything in Telegram. The Logic 247 alerts, Concierge Trade Alerts, discussion groups, weekly trading zones, you name it, we got a channel for it. Make sure you have the link to the discussion group, because we got some very talented traders there who have learned our methodology, learned our strategy. Anytime you have a question, there's almost always somebody hanging out that can answer the question for you if I myself or Valerie or Michael happen not to be around. Here's gold. This was a long. It was stopped out. Remember, the maximum we want to risk on a Logic 247 alert is $300 per contract traded. Less when possible. Okay, the chart told us that this one required a $250 per contract risk, and it was stopped out. This is crude oil that did not trigger. Russell. Alert number 5,637. To be long or buy 1663, initial target 1665, second target 1680. Now this has a PT because it only made it. To qualify as a PT, price has to get to at least 60% or better to that initial target. So there's plenty, at 60%, there's plenty of room to at least take some profit or get your stop to break even if you so choose. So on this one, the market made 95 bucks available. Another no trigger. There's a hedge on the Dow, good for 60 bucks. This is the hedge on the NQ. To buy 12,370. Target, initial target 12,380. That's $200 per contract. Potential resistance 12,400. Weekly trading zone 12,516 / 12,517. Price is always trying to get to a weekly trading zone, either the one above or the one below. Now we publish the weekly trading zones for our partners every Monday morning at 6:15 a.m. Eastern. We've published them since December 14th of 2009. Creates a framework of fixed support and resistance that will serve you well the entire week. We've had some extremely volatile weeks these last couple weeks where we've had price climb above the highest weekly trading zone. Very unusual. In the decade plus that we've been publishing the zones, that's happened probably 20 times total. I haven't kept an exact track, but it feels about right. So on this trade, where you're buying the NQ, market made $760 per contract available. ES, long, $87.50 per contract traded. There's a long on gold, 110 bucks. No trigger. Now that was November the 8th. That was all Sunday night. All of this, everything we just scrolled through, that was Sunday night. Okay, plus the carryovers. And then we move into Monday, November 9th. no trigger on the S&P. A hedge on the S&P, which was worth $1,050 per contract traded, selling 35.80, initial target 35.78, potential support 35.67, or think of it as a second target, and then the weekly trading zone at 35.57/35.58, and the swing low was 35.59. So it came within 1 point of touching the final target, 1,050 per contract traded. I goofed this one all up. I typed in ES, but I put in data for Crude, and so Valerie just had to scratch that one from the record because that symbol and those prices don't match. Here's a short on the Dow, good for 85 bucks. Here's one we're still waiting on. Here's a short on the NQ. Sell 11,770. Initial target 760. There's $200 per contract. And let's talk about that for a minute. When you start out with us, we don't want you trading live right away until you learn our strategy. Now, it's possible that you're already a consistently profitable trader, but you realize the value of the alerts and all the time and energy it saves you analyzing charts. So you may already be a live trader when you come on board, so that's a separate issue. But if you're brand new with us and you're just learning our strategy, you haven't been profitable in the past, I want you to trade in the simulator in the demo account, which is just like the real account, except it's not real money. We want you to put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Once you complete those 10 days in a row, our 24/20 blueprint will give you the green light to go long with one contract. Now, the 24/20 blueprint is designed to help you chart your course from 1 to 20 contracts over a period of 24 months. So it's not a get rich quick scheme. From 1 to 20 contracts is, we're talking 22 years, 24 months, right? But it gets real interesting real quick. Once you increase your account balance by $2,000, once you go live with one contract, increase your account balance by $2,000, the blueprint gives you the green light to add a second contract. The profit that you earned off the first contract, that underwrites or pays for the second contract that you add. The blueprint will tell you when it's time to add number 3. Again, you only add more contracts if you can do it with profit you earned in the market. So while with one contract, this initial target is 200 bucks, at 2 contracts it's 400 bucks. 10 contracts, you can do the math. Now this made $360 per contract traded available. So trading 10 contracts, that would be $3,600. But the last thing you want to do is try to jump to the head of the line just because you have the money and can afford to trade multiple contracts. Please, if you're not already consistently profitable when you come aboard, spend some time in the demo account, put those 10 consecutive days together, go live with one, increase your account balance by $2,000, add your second one, and then just work your way up the ladder. Anytime you have a day, 2 days in a row, back to back, where you don't reach your goal in 10 trades or less, you should come out of your live account, back into the demo account, book a mentoring session with me or Michael so we can walk through the trades with you, kind of help you understand what happened. Then you trade a day or two in the demo, get your confidence back, and then you step right back out where you left off. You don't have to start at one again. No trigger, NQ stopped out. No trigger, no trigger, no trigger. Here's silver. This one was worth $1,300 per contract traded. That's what the market made available. A 2-penny move in the price of silver is worth $100 per futures contract. A $1 move in the price of silver, let's say silver goes from $24 to $25, that's worth $5,000 per contract traded. Margins are high. All margins are high right now because of the increased volatility. Here's the long on the ES, it's 87.50. Stop out on the Russell, 225. There's a long on the NQ, 11,700 to 710 to 720 to 754/55, and it actually went a little bit further. The swing high was 11,759. So this one, $1,180 per contract traded. That's what the market made available. Okay, we're all the way up to today, November 11th. And so far we've had a long on the NQ, and we have some other orders that some other alerts that we're still waiting on the results of. So again, the way these come at you, now you're looking at Mountain Standard Time here. Telegram reads the clock on your computer. So whatever time zone you're in, that's what's going to show up in your Telegram channel. My charts are set to the East Coast. Telegram, Mountain Standard, 4 months out of the year, 8 months out of the year Pacific, because I'm in Arizona, we don't do daylight savings time. Okay? So you never know when an alert's going to come out. The alerts are based on whenever opportunity presents itself. So it could be 2 a.m. or 2 p.m. because remember, we're monitoring global markets. Now, if you don't want to be bothered at 2 a.m., then turn notifications off, because these signals will go to your cell phone, your tablet, your PC, your Mac, wherever you want them to go. And you'll hear that telegram sound whenever there's an alert. And I'd make sure you have plenty of time to get to your computer, get your thinking cap on, get your trading cap on before you start putting on a trade. Okay? Now, that's how those work. Now, let's go back to the Concierge. If you didn't grab a screenshot before, and you would like to, you can. Now, these don't come out around the clock. This is a static report, good for the entire session. Okay? So let's go to the 30-minute chart of the S&P. Weekly trading zone. The most likely thing that's going to happen when price hits a weekly trading zone is consolidation. So these are 30-minute candles. So if you like trading on a 5-minute chart, then you'd have a lot of 5-minute candles. You know, you'd see the consolidation better, but you know, sometimes even on the 30-minute chart, we'll see 5, 10, 15, 20 candles just lined up right across there. Only 3 things happen at a weekly zone. The most likely, consolidation. Second most likely is rejection. The third and least likely is the slice. The price slices through it like it's not even there. Now, last night's Concierge Trade Alert for the S&P was to be long 35.75. Swing high so far, exactly 35.75. Yeah, I think my line's straight, but pretty close. Price walked right up to the trigger, backed up. It's now taking its second run at it. And we have a Logic 247 alert, one of the ones I just showed you that we're still waiting on, sitting right up above it. So what price did, consolidated, got above the weekly trading zone, pulled back to the BBC. When that happens, when price pulls back to the BBC or a weekly trading zone from above, we expect that to be good support. So this was good support times 2, BBC and the zone. They both held as good support, but then price had to get above red and falling, because remember, that's bearish. When price gets above red and falling, see how it's starting to turn up, just like it did right here? This red and falling will turn into blue and climbing if price continues to rise. So, the short last night on the Concierge was down at 35.30. And we never made it there. So they went out at 1900 hours last night. So there's the 1900 hour candle. And there's 35.30. So we came close to swing low, 35.31. The trigger was down at 35.30. So no trigger on the short side. Some days do see two-sided action where we'll trigger both on the short side and on the long side. Next is the Dow. Now we're dealing with some unusual times right now from the pandemic, but that's been going on all year. The election snafu, and the fact that the S&P 500 is flirting with this new all-time historic high. Markets do not behave, quote unquote, normally when you have exogenous conditions like that. Now, this is typical. Price puts in a leg, pulls back to the BBC, puts in a leg, pulls back to the BBC, leg, pullback, leg. This pullback did not hold. Now, remember I said price is always trying to get to a weekly trading zone. Price was trying to get to the zone overhead at 29,740. But right here, things changed. And it was on this candle that we went back below the BBC, which now says price is trying to get to this weekly trading zone. And you can see how much consolidation we had at the zone. That's very typical. So just as when price pulled back to the BBC, we expected it to hold, to give us a long opportunity. I mean, we pull back, we get an up close, the price goes from 424 up to 540. That's about a $500 per contract move you're looking at right there. Okay. Now that price has gotten back below the BBC, remember, price always reverts to the mean. It always goes home. So just as this pullback, we look for support. This pullback, now we're going to look for resistance and a potential move to the downside. If price starts moving down, okay, we'll need a red candle. We want to still have red and falling. On the way to the zone, this swing low could act as potential support. So that's where in an alert, in fact, I think there may be a Dow alert out there where this swing low is labeled as potential support. Price could come down, find support, put in a little double bottom, and then make a move to the upside. Patience when you're trading a 30-minute chart. Now, the range chart that we use in the morning in the live training room, training purposes, is very fast. I know some of you sometimes struggle keeping up with that. You can always use a 5-minute chart. There's some days when the 4-tick range is like a 1-minute chart, another day is like a 5 minutes, but it's not based on time. The range chart is based on price. So last night, the Dow Concierge Trade Alert, consider being long at 29,480. So this initial swing high here was 9,545. So if you take 545 minus the entry 480, that's that in this one candle right here, 65 Dow points at $5 a point is $325 per contract traded. Price then got back below the trigger. Remember I said important prices, important areas are almost always tested. It's a perfect example. First, the market hands us a $325 per contract opportunity. Gets back below the trigger, triggers a second time, puts in a swing high at 570. So 570 minus 480, that's 90 Dow points. At $5 a point is $450 per contract traded. So two very nice opportunities right through here. But the short side for the Dow is 28,910. Way down here, so this never got triggered in this session. $28,910. But that is an important price, important area. So if the market, again, because we've done the bearish cross, price pulled away, price pulled back. So if price makes the trip, which is pretty quiet right now, usually is this time of day. But in the afternoon session, if we start making this move, initially we think of support here. However, if the support of the weekly trading zone fails to hold, and this swing low fails to hold, then this is the trigger on the short side. Okay. Next on the list is the Russell. That's about as flat and sideways as you can get. This is 2 days running now. This was November 10th through today, November 11th. Not a lot going on with the Russell. Again, it's because of that indecision based off of the S&P 500, which is the bellwether. The indices, the S&P, Dow, Russell, NQ, typically, historically, travel as a pack. The four of them go in the same direction. Whenever you have one or two of them fighting the trend, heading in the opposite direction of the S&P, things like this happen. And Stephen said it really well the other night in the channel. Let me see if I can find that real quick. He worded it show you what the channel looks like. Here we go. One of our traders, Stefan, said the hardest skill set to develop is active patience. Well, we all know what patience is. What's active patience? Active patience equals diligently verifying your thesis and doing nothing until there's something to do. In other words, you're a trader, you want to be trading, but you got to wait for the market to give you a high probability, low risk trade setup. Now in this discussion group, you can scroll up for, I go well over a year. Questions, charts, suggestions, answers, you name it. It's our community, and you're welcome to come and hang out and participate in the discussion. So we'll go back to the Concierge Trade Alerts, to the Russell. It said to consider being long above 1744. This is the problem with these sideways flat markets, is you don't get the follow through. Now we did touch 1744, the long side, but the swing high right there is 45.9. So it was one tick shy of 2 points. 2 points is $100. It's backs below the trigger, triggers again, gives us the exact same swing high, 46.90. Gets back below the trigger. This time 47.80, okay. And then we cross below the BBC, and we cross below the weekly trading zone. When that happens, you know price is always going to revert to the mean. We expect this to be good resistance because we're approaching from below. So far it has been. So the next high probability move is to the downside. It's not possible to know what's going to happen next. Now, a lot of websites will give you the impression that they do know what's going to happen next, but I assure you they don't, because God did not give man that ability. It's all in Genesis if you care to go read about it. Man, nor his machines, cannot change the past or know the future with certainty. Okay? But again, with a coin flip, you can be right half the time. Right? Okay. So the short side for the Russell was 1719. The swing low was 1717.1. So again, one tick shy of 2 points, just like up here. This is the most frustrating type of market to try to trade. You can do it. You can do it on a smaller time frame, but when you're deploying the larger time frames, you've got this range, which really is based on this swing high. 1750, and this low, which is 1706, and price is just chopping around inside of there. But this too shall pass. We'll get back to normal, regular days where the market just flows and flows and flows. And as a futures trader, it doesn't matter if it's flowing up or flowing down, just so it's flowing. Movement is what we need. Nothing other than just sideways. This is a sideways grind. All right, next is crude oil. Now, Now, crude exploded this week. We're above the highest weekly trading zone. However, by close of business on Friday, we still anticipate price being below the highest weekly trading zone. So we got a bullish cross here. We had a leg and a retracement. Leg and a retracement. Consolidated at the zone. Put in a swing high. Came right back to the BBC. Price always reverts to the mean. It always comes home. Another leg. Another swing high. Then what happens? We pull back. We consolidate at the BBC. Blue and climbing. Turns to red and falling. Now we have a bearish cross. Now price is below the BBC. So over here we're anticipating higher prices. Now, because of this bearish cross, we anticipate lower prices and or the weekly trading zone right below us at 41.25/41.30. So again, even though you can't know the future, with our strategy and our indicators, you can know with certainty what the next high probability move is. Does the high probability thing always happen? Nope. Otherwise, you would be able to say that you can tell the future, but we can't. But based on our indicators, based on our strategy, based upon the underlying principle of how auction style markets work, we can anticipate with great certainty what the next high probability move is. And from here, with red and falling overhead, price below the BBC, the bearish cross, the high probability move is down to this weekly trading zone, 41.25/41.30, and that creates a nice window of opportunity. And I'm pretty sure in the Logic 247 channel we have just such an alert with your entry, your initial target, potential support. Potential support is a swing low, and then weekly trading zone should be good support. Okay. Now for Concierge last night, consider being long at or above 42.40. Now the alerts came out at 1900. The price had already started to decline, serving long above 42.40. There we go. So from 42.40, price triggered, put in a swing high up at 42.60. That's $200 per contract traded. Got back below the trigger, put in another swing high up at 43.06. That's about $600 per contract traded. Now, if I continue this line across like that, you could say, well, it did it again. It got below the trigger, but the dynamic's different. Over here, when you trigger long, you know you're going to run into red and falling, which there's a high probability that could become resistance. As you see, that's exactly what happened. So while these triggers were high probability, because you had the support of blue and climbing, here you're going long into the face of red and falling, which took us to a bearish cross. And again, a high probability move from here is back down to the weekly trading zone, with potential support being right at this swing low. Last night's alert for the NQ to be long 11,770. This first trigger only ran up to 11,770. The swing high was 75. So that's 5 points at $20 a point. So that's $100. We get back below the trigger. Trigger again. This time we run up to 785. So that's 15 points at $20 a point. So that's $300 per contract traded. Now it does the pullback to the BBC. And this time it means business. Now this initial swing high took us to 11,828. But the market hasn't given us an exit signal. So the swing high is 11,887. Minus the entry, 11,770. So triggering in on this trigger, so we had 1, 2, 3 triggers. On the third trigger, had you been able to get out at the exact swing high, which is not possible, that's 117 points, $20 a point. It's $2,300 per contract traded. Now the way an exit signal works, you'll see as this thing starts to climb, the step line, this little black line, is on the left side of blue and climbing. When the step line crosses over, like it did here, on a long trade, we're looking for the first red candle that closes below the step line. That's the market saying this move may have run out of steam. You may want to consider getting out. So while this looked like it was going to become an exit signal, look at what's happening. The NQ doesn't look like it's quite done yet. So if price takes you back up into this area, I would certainly consider taking profit up in that area. Could it take out those swing highs? Of course. It took out that swing high, took out that swing high, and that one, and that one, and that one. It's the definition of a trend. So you, of course, have to decide what kind of trader are you going to be. Are you going to trade for your couple points a day? A small achievable goal that can be reached on any day in any type of market, up, down, even sideways. And as you become profitable trading that strategy, you add contracts. Some people think the answer to the equation is, well, I need more points. I want to take 20 points a day out of the S&P. Well, under normal conditions, a lot of days the S&P might not give you 20 points in a directional move. So you've set up an unrealistic expectation for yourself. Now, a 2-point move in the S&P, every day since I started trading futures in 2005, the S&P, along with the other markets, have made the equivalent of a 2-point move, $100, available over and over and over and over. So that's something consistent, something constant, something you can count on. Okay, so if I just learn how to get 2 points a day or the equivalent thereof in other markets. In the NQ, 5 points at $20 a point would be $100 per contract traded. But by the time you've earned to trade 10 contracts, those same 5 points are now worth $1,000 a day. So you have to decide, do I want more points or do I want to trade more contracts. You never know what the market's going to hand you on any given day. But if you have a goal that shows up 99.9% of the time, every day, you get to decide which is better for you. Okay, next on the list is gold. The alert on gold was to be short, 1857. Which we just reached. $18.57, we put in a swing low at $18.54. So that's about $300 per contract traded. Swing low here, 56.1. Again, the trigger was 1857. On the long side for gold, we were looking for 1894. And that never happened. So gold has triggered, gave it a pretty good $300 move. And then not so much of a move. But it is possible that we will get one, two, yet a third trigger. Patience required. And then last on the list, silver. And silver, remember, if silver moves $1, in other words, it goes from $23 to $24, that's worth $5,000 per contract traded. A 2-penny move, 2 pennies, is worth $100. Last night's alert was to be long, 24.40. Now the alerts came out 1900 hours, right here. It said to be long, 24.40, which is right here. And the weekly trading zone overhead is at 24.52. So buy 24.40. It's like the swing high was 51, penny away from reaching the zone. We call it a dime. $500 per contract traded. And then we never really got back below the trigger again. Well, we got back below the trigger here. Oh, and we did have this little, this moved up 3 pennies. Remember, 2 pennies is $100. This went up to 24.43, so 3 pennies. But we had a bearish cross. So we hit the zone, consolidated, go back to the BBC, hit the zone again, go back to the BBC, but then we got a bearish cross. When that happens, price pulls away, price pulls back, down close. Now we're looking for lower prices. The alert on the short side for silver was 23.90. $23.90, and we got a swing low at 23.81. So 2 pennies is $100. There's 9 pennies. Call it 400 per contract traded. Silver, gold, crude still inching its way down. Again, this is typically a pretty quiet time of day. Tonight's Concierge Trade Alerts will be out shortly after the Globex Open. Hopefully we'll closed strong today. New all-time historic closing high on the S&P. Now, what typically happens is when we have a new all-time historic closing high, that usually leads to a pretty good dip, sell-off, whatever you want to call it. The fibs that I have drawn on go from the pandemic low here, March 23rd, to the intraday high, November 9th. This is where the 24% fib is. However, on a pullback, the first place we expect support is at the BBC. If price trades below the BBC, then we'll look for support at the 24. And then here is the 38% Fibonacci retracement, which is an area I've already highlighted as potentially good support. Okay, so there we have it, around the world in about an hour. If you've struggled in the past to learn how to trade, it very well may be because you simply had no one to teach you how. Futures Magazine published an article in 2006. 9 out of 10 new traders failed. They had all the statistics, but they didn't tell you why they failed. So I set out to figure it out and found out it was because nobody had a teacher. So I tried to hire a teacher, put up some good money, couldn't find anybody to take me up on the offer. So Michael and I had to go a long, expensive way around the mountain. Now you can benefit from all of the time and treasure that we had to spend to put together the strategy that we use today, kind of like going to the head of the class. You've still got to put in your work, but at least you're not wasting time going down blind alleys that aren't going to bear good fruit, or spending money on useless indicators that, you know, sometimes they work, sometimes they don't. Our indicators work every day because they mirror the flow of the market, and that's all that matters, order flow. If you want to have a realistic shot at becoming the 1 out of 10, the best way to do it is to get a teacher. Pay us a visit at eminifuturestrading.com. Call Valerie at 949-42-EMINI, or you can email us support at CFRN.net. Okay, our good word for today. Traders get discouraged. Part of that has to do with not having a teacher to encourage you. Teacher slash coach slash mentor. When you become a part of the family, not only do you have access to the classes, the indicators, we teach you the strategy, but you also have access to unlimited one-on-one mentoring sessions. When you're brand new, you should immediately book one. And then a lot of new students will book, 1 or 2 sessions a week in the beginning. And then it falls off to once a week, once every other week. But whenever you need it, all you have to do is book it. It's included. It's a complete package. So today we'll talk about how to overcome discouragement. Nehemiah 4:14. It says, I looked things over and arose and said to the nobles and to the officials and to the rest of the people, do not be afraid of them. Remember the Lord, who is great and awesome, and fight for your brothers your sons, your daughters, your wives, and your homes. First, find a better way. While rebuilding Jerusalem's walls, Nehemiah said, I looked things over, realizing there were enemies to be defeated and obstacles to be overcome. He stationed some of the people behind the lowest points of the wall at the exposed places, posting them by families with their swords, spears, and bows. That's Nehemiah 4:13. See, not only do you have to overcome the market, but you also have to overcome the journey. You have to choose what journey are you going to take to get from where you are today to where you want to be. Will it be the sexiest website, the one that makes the most ridiculous promise, the one that guarantees you'll never get stopped out again, or some other 95% winning ratio? And I don't consider it winning. When you go to work, what do you expect? You expect to win something when you go to work? Or you expect to earn your salary, or whatever it is, however they measure out your pay, right? Little things like that. Hey, I had a winner today. Well, when you have a strategy that you apply every day in the same manner, then every day should be a productive day. Now, there's no promise or guarantee every day is going to be profitable. But when you have a humble goal and you're consistent with your efforts, see, everyone wants consistent results from the market. But what few people give the market is a consistent effort. See, to get consistent results requires a consistent effort. All right. Now, in order to overcome discouragement, Nehemiah realized they'd have to start doing things differently. They needed a new system. So he organized the people according to their gifts and strengths. Insanity has been defined as doing the same thing over and over again and hoping for a different result. There's a lesson here for all of us. Let me give you an example. Do you have a problem in your marriage? Don't give up. Try a new attitude. Do you have a problem in your business? Don't throw in the towel. Look for a new approach. Reorganize your schedule. Refocus on your goal. Have you ever heard of the 80-20 principle? That's where 80% of your time is spent on 20% of activities that aren't productive, and as a result, you get frustrated. You may have heard it of the 80-20 principle. You may have heard it other ways, that 20% of the people do 80% of the work. 20% of your trades will give you 80% of your profits. Okay? What you need to do is devote 80% of your time to the 20% that produces the highest results. And that's exactly what we're talking about with learning a strategy where you can come in every day. You're not going to become a movie star. You're not going to knock one out of the park every day. And you're not trying to. What you're trying to be is consistent. So when we teach you a trade setup, provide you with the indicators, an understanding of the methodology and strategy so that it becomes a part of you, how you see the markets, how you think. And while that setup may only appear 20% of the time, it will equate for 80% of your profits. Business managers call this ROI time, return on investment. So practice devoting the majority of your time and energy to the things that you know bring results. That's not only in your trading, but in every area, in every aspect of your life. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.